The 50-day moving average is one of the most important indicators that we use to determine intermediate term trend. When the price of a crypto is above the 50-day moving average, it's considered to be in an intermediate term uptrend. When the price is below the 50-day moving average, it's considered to be an intermediate term downtrend. Now, this is widely considered to be the case with both individual investors and retail institutional traders as well. The 50-day moving average is so important that we use it as the basis for determining whether we want to be on the long side of the market or the short side of the market. Generally speaking, when we're in a trending market above the 50-day moving average, we look to buy long on the pullbacks and breakouts. And if we slip below the 50-day moving average, now the trend flips over to the short side and we look to sell short or be in cash. And right now, it's all about the 50-day moving averages for both Bitcoin and Ethereum, as well as a host of many altcoins. Let's take a look. Back in mid-April, Bitcoin broke out to a new high of the year, peaking at almost 31,000 before correcting and pulling back to support of its 50-day moving average around April 22nd. When we came into support of the 50-day moving average, we said in the chat room that this was a level that we'd probably see a bounce, and that's exactly what happened. You can see that the price came into support of the 50-day moving average. That's this red line. And we had a nice bounce. However, we did not get a steady trend back up. Instead, what happened was we had a lot of volatility. You can see here right after the bounce, we had massive volatility with the wicks on both sides of this candle, rallied all the way up to as high as 30,000 that day and as low as 27,000. Crazy. Big tug of war between the bulls and bears. Next day, we got a little bit of follow through to the upside. Broke out back above the 20-day moving average, but after several days of consolidating near the highs, the price action stalled and came again into support of the 50-day moving average. Now, once we bounced off this 50-day moving average several more times, we said several days ago that the next test of the 50-day moving average would have high odds of breaking down below it because each test of a support level weakens the support. And after several tests within just a 2-week period, there's an increased odds of a breakdown. And that's exactly what happened. You can see here yesterday, May 7th, we had a breakdown below the 50-day moving average. And in the chat room that day, we actually said that it was a potential short in Bitcoin when we break down below the 50-day moving average. So that's exactly what happened. We had a firm breakdown below the 50-day moving average yesterday, which now officially means we're not in an intermediate term uptrend. Now let's take a look at a few other things, such as where we might find next support and where resistance would be. So with us breaking down below the 50-day moving average in Bitcoin, the next short-term support area to keep an eye on is the 26,500 to 27,000 area. And that's formed as support by the prior lows, which you can see here also converges with the 50-day moving average. And then we go back to March and we've got some more prior lows. So this range here between 26,000 and 27,000 is a realistic target that we may see in the short term. One possible scenario that we may see is an undercut of the prior lows from late April. An undercut is when the price dips below an obvious level of support, runs the stops, and then reverses back above it all in the same day or within 1 to 2 days later. An undercut can be bullish. However, if this prior low fails to hold, then we could be looking at more selling in the near to intermediate term. So if this 26,500 to 27,000 area fails to hold, then look for the next move to take us down to next major support around 25,250. And for that, we go back to February. We can see the prior highs now become new support. One of the most basic tenets of technical analysis is that a prior level of resistance becomes the new level of support after the resistance is broken. So therefore, when the prices come back down to this level, we should see significant support. And that could be a point where we may see a significant tradable bounce. Now, if we do get a rally attempt in the coming days here, look to find resistance at the 28,500 to 28,700 area, which is basically 3 different moving averages converging together, the 10, the 20, and the 50-day moving average. Now, that's going to be a significant level of resistance to get above. And in fact, if we get a rally up to that point, that could present another opportunity to sell short. In terms of these moving averages, we also need to be aware of the possibility of a crossover. In a healthy uptrending market, the moving averages are stacked in the order where the fast moving average is on top and the slower one on the bottom. In other words, the 10-day moving average is above the 20 and the 20 is above the 50. But when the trend reverses, the opposite starts to happen and the short moving averages cross over the longer moving averages, and then you've got a downtrend. So it's too early to declare that we're in a downtrend now. However, we can say safely that now that we've broken below 2 weeks of chop, that we're definitely not in a intermediate term uptrend at this point. Now, it may be negative on the surface that we broke below the 50-day moving average, but on the other hand, as swing traders, it's actually beneficial to us more so than the price action of the past 2 weeks. The past 2 weeks has been extremely choppy with whipsaw price action, but it's very hard to maintain staying in a position when there's no steady trend. So even though we've broken below the 50-day moving average, this is actually beneficial because now we may actually be entering into a more defined trend with less choppy price action. Let's also take a quick look at the weekly chart of Bitcoin, zooming out to a little bit longer term time frame. On the weekly chart, we see that the price is now trying to hold on to support of the 10-week moving average, this green line. But if we go any lower, then we're going to break below that 10-day moving average and probably come down to the 20-week moving average, which is currently around 24,700. And you notice that back in late February, when we had the sell-off, we actually found support and formed a reversal candle that week, and that's what resumed the trend higher. So there's a possibility that when we come down to the support level, again, which also aligns with prior highs, that we may see some buying pressure. And again, keep in mind in the daily chart that I just showed you that this is also a level of horizontal support from these prior highs, and that happens to converge with the 20-week moving average. So we're actually looking at the 24,500 to 24,700 area as a significant support level that we may see in the coming days and weeks. Next, let's take a look at Ethereum. Ethereum is important because it's commonly known as a proxy for the overall altcoin market. So when Ethereum is strong, often the rest of the altcoin market is strong. And when it's weak, then typically most of the altcoins are going to be weak. So that's why we closely track Ethereum and discuss Ethereum daily in the chat room. So we look at both cryptos as a benchmark for the overall performance of the crypto market. Now, as you can see here, it's a very similar chart pattern to what we have on Bitcoin. Like Bitcoin, Ethereum also broke down below its 50-day moving average yesterday and now has resistance of its 3 moving averages above, which are headed for a crossover if the weakness continues. So we've got resistance in the 1875 to 1885 area right here. If we try to bounce, expect to find resistance at that level. And we've got short-term support of the prior swing lows, just like on Bitcoin, in the 1785 to 1806 range. If this level fails to hold after an undercut, then look to find much more significant support at the 1720 area, which is support of the prior lows from back in March, as well as prior highs from February. So it's a major area of horizontal price support around 1720. And now looking at the weekly chart of Ethereum, it's a very similar pattern to Bitcoin in that we're currently trying to hold the 10-day moving average, but if that fails to hold, we've got the rising 20-week moving average, which is currently at 1685, but rising quickly and will soon converge with the prior highs around the 1720 area. And again, notice how back in March, early March, we had a reversal, again, right off support of the 20-week moving average. Now, the focus of the Morpheus crypto service is looking for swing trade setups with low-risk entry points that have high relative strength. Now, typically, the focus of these videos is going to be looking at individual trade setups of altcoins that are coming into our radar for potential buy entry. However, with us just breaking down below the 50-day moving average, this is not the time to look to get long, at least until we start to see some type of bullish reversal. And at the moment, we don't have that. So we wanted to focus this video primarily on the big picture, looking at Bitcoin and Ethereum. But as we move forward, of course, these videos will focus primarily on individual altcoins as well as the overall market. We hope you enjoyed this video, and we'll see you again on Wednesday.